Hello class. In this video, I would like to cover the concept of a planning budget and a flexible budget, and then the calculation of your activity and spending variances. So remember from chapter 8, we discussed a master budget, which included several smaller interdepartmental budgets that connect and create an overall master budget for a company. Those included your sales, production, direct material budgets, but they were all based on a detailed quantitative plan. So in this chapter, will break the concept of a budget down even more to a simplified version of just what you plan to spend based on some set level of activity is called your planning budget. So it's still a detailed plan that includes two elements: what you plan to spend per unit and how many units you plan to either generate or what kind of revenue you plan to generate based on a total number of customers and clients that you plan to serve or sell your product to. So the planning budget is the first concept. It is based on one set level of activity, also known as a static budget. I consider it like a Word document. It would be an estimated amount of activity. So if I were to generate a budget for how much I should spend each week on lunches, I would have a set standard amount that I plan to spend per lunch. So that is a variable cost to me that does not change. Remember, your definition of a variable cost is that the per unit will stay constant. But my total budget would be based on how many times I plan to go to lunch each week. So if I was going to go to lunch every day, 5 weekdays, my budget would be $30 in total. My planning budget would say I plan to spend $30 for lunches this week. Okay, so I just introduced the concept of the planning budget. Next, I want to discuss what actually happens. Throughout the week, maybe I decide that I'm really going to try to stick to this budget. So the first day, I spend $6 at lunch, and I am within my budget. So day one, I'm going to write these down so we can remember I spent $6. Day two, I decide to call my mom and see if she wants to go to lunch with me, and she graciously decides to buy my lunch. So I don't spend anything on lunch for day two. Day three, I feel really good that I saved money on day two, and so I splurge and I go buy a $10 lunch at Tropical Smoothie, because you know I love Tropical Smoothie. And it's kind of expensive. Day four, I find a coupon in my purse or I had a free reward actually on my Chick-fil-A app for a free sandwich. And so I go there, but I still purchase a side salad. So I spend $3. I just drink water with my free sandwich. And then day five, I really want to be good on my budget. And so I just skip lunch. But then I come home and I'm super hungry and I overeat. So that wasn't a good decision. So what I actually spent, my actual total spent, remember, was 6 on the first day, 10 on the second day, or 0 on the second day, 10 on the third day, and 3 on the fourth day, 0 on the last day. And so I have spent $19 total. Okay. So that then, remember our planned budget was $30, cannot be compared to the plan. That would be saying, here's what I thought I was going to spend, here's what I actually spent, and you would be skipping a crucial part, a crucial point in your budget analysis, because it's great to set budgets, but then if you don't compare them to what actually happened, they were kind of pointless, right? So your expectation needs to be compared to what actually happened. And then you need to say why. Why did I exceed or meet my budget? And the two reasons you're going to find in this chapter are that you were within your activity realm or not planned, or you were within the spending realm. So if I want to be able to see that cause or the creation or the variable, the variance in my budget, what caused it, I have to break it down actually to a flexible budget in the middle of the process. Your flexible budget is based on actual activity, and it will take the per unit standard, which we said was $6 per lunch. So your per unit standard, and multiply it by how many actual units you sold, or in my example, how many actual days I went to lunch. So the activity is updated to an actual quantity. I went to lunch 3 days. So my flexible budget says I should have spent only $18. Initially, we said we could spend $30, but that was when I went to lunch 5 days. If I only go to lunch 3 days, essentially, I can't always call my mom to come and pay for my lunch, and I won't always have a coupon either or a reward, and I can't skip lunch every week. I mean, I could, but it's not going to be good for my health, and I will be hangry. So the flexible updates to what actually happened activity-wise. So now what I can do is calculate my variances. Okay, so we had just created our flexible budget, which is based on actual activity. Several of the homework questions, you're just going to have to update your budget based on actual activity. So all of the variable cost per units would stay the same. You would multiply your variable component by the new actual activity and get a new total of the variable components. The fixed won't change at all. So when you're analyzing your fixed cost in the comparison of a planned budget to a flexible budget, there would be zero variance. Your fixed cost, when you're analyzing the activity variance, which is a comparison of your planned budget to your flexible budget. So when we look at our example of the lunches, it was purely based on a variable component. In the homework, you will have some budgets that have variable and fixed components. The activity does not change the fixed component. The way a fixed cost works is the total stays the same. So there would be no change or no variance on a fixed cost when you are analyzing the activity, when you are saying, did my budget change because of activity? So let's break this down. The flexible or the planning budget said we were going to be allowing ourselves to spend $30 if we went to lunch 5 days. We only went to lunch 3 days. So when your activity has decreased, all of your cost variances on activity, with less activity, you should have less cost, are going to be favorable. So looking at mine, I actually had a difference of $12, which came from a two days less activity that I was going to save $6 each day. So this is actually going to be labeled a favorable variance. If you have less activity, your cost would be favorable. You should be spending less money, right, on activity, creating less cost. Your revenues, though, when you have less activity that's generating less revenue, that's going to be unfavorable on your revenues. So I will say that again. Activity, when it increases. You would increase cost, and that would be an unfavorable item. Revenue, if you increase activity, that would be favorable. I want more revenue. But the opposite is true on the activity decreasing. If I decrease activity, I would have less revenue, that would be unfavorable. I'd have less cost, that would be favorable activity-wise, the variance activity-wise. The other variance we're going to analyze is the spending component. Did I spend what I said I was going to spend? Well, I said I was only going to spend $6 per lunch, but I ended up spending a total of $19. So I overspent on the per lunch cost by a total of $1, right? My 18 compared to my 19, my flexible being compared to my actual cost is called a spending variance. It tells me that I overspent on the per lunch cost. It was overspent by $1, therefore it is unfavorable. If your actual cost is greater than your flexible, it is unfavorable. If your actual costs were less, you had saved money, and that would be favorable. So I cannot jump from planning to actual and get a true indication of my variances and why I have variances. I have to stop in the middle and update to this flexible component to find the real reason why my budget doesn't match what I actually spent. Sometimes it's good, sometimes it's bad. We don't necessarily call the favorable and unfavorables good and bad because they're really just an indication of what has happened. I guess I'm going to go fix my whiteboard. No, it was already broken before. Okay, let me know if you have questions.